Hey everyone, and welcome back to the Deep Dives. We're continuing our series on investing.
That's right.
And today, we're going to be diving deep into some practical steps that you can take to start growing your wealth, no matter where you are in the world.
Absolutely. And investing as an expat might seem a little bit tricky at first. But, with the right approach, it can really be a smooth and rewarding journey.
For sure, for sure. So before we even think about, picking stocks or bonds,
Right.
let's talk about the groundwork.
Yeah, it's like building a house. You don't start with the roof, You need a solid foundation.
So what's the first brick we lay in this foundation?
Well, first things first, we need to tackle any high-interest debt, especially credit card debt.
Okay.
It's like having a hole in your pocket. No matter how much you try and fill it, the money keeps leaking out.
Right, and that hole gets bigger and bigger the longer you leave it, right?
Exactly. Think about it. If you have, let's say, a $5,000 balance on a card with a 30% interest rate, you're looking at roughly $1,500 in interest every single year.
Yeah.
And that's money that could be growing in your investments
Yeah.
instead of going to the bank.
Yeah, that really puts things into perspective. It's like paying a huge premium just to use your own money.
Absolutely. It's crucial to get that debt under control before you can really start making your money work for you.
Okay, so debt is paid off.
All right.
What's next?
Next, we need to build our financial safety net, the emergency fund.
Okay, I've heard about the importance of an emergency fund,
Yes.
but why is it even more crucial for expats?
Well, think about it. You're living in a different country, maybe navigating a different language, different healthcare system.
Right.
Unexpected things can pop up. You might need to fly home unexpectedly,
Yeah,
maybe deal with an unexpected medical blow.
that makes total sense. So how much should we aim to have in this emergency fund?
A good rule of thumb is 3 to 6 months of living expenses tucked away. This should cover essential costs like rent, groceries, utilities, transportation.
I know I've been guilty of dipping into my emergency fund
Sure.
for a non-emergency before.
I understand it can be tempting to raid that emergency fund for non-emergency situations, especially if it's easily accessible. That's why I recommend having a dedicated account. Specifically for emergencies, ideally in a separate bank, maybe even offshore.
Offshore.
Yeah.
Why is that beneficial for expats?
Well, an offshore account can provide an extra layer of security and accessibility. You can access your funds from anywhere in the world, and it helps protect you from potential economic or political instability in your current country of residence.
Interesting. It's like having a financial lifeboat in case of a storm.
Exactly. Plus, having it in a separate bank, out of sight, out of mind,
Right.
can help you avoid those impulse purchases.
Great tip. So now that we've got our financial house in order, now we need to create the blueprint for our financial house. This is where your investment strategy comes in.
Okay, so how do we start crafting this blueprint?
First, you need to figure out your FI number. This is the magic number you need to accumulate to achieve financial independence
Okay.
and cover your living expenses without relying on a traditional job.
I have heard the term FI number thrown around, but how do we actually calculate it?
There are different methods and online calculators that you can use, but essentially it involves determining your annual expenses.
Right.
And then calculating how much you need to invest to generate that income passively.
Sounds like something we might need a whole separate deep dive on.
Definitely a topic for another day. But for now, just keep in mind that your FI number will guide your investment decisions
Got it.
and help you stay focused on your long-term goals.
So we have our FI number.
All right.
What's next?
We need to consider your target retirement date.
Okay.
This will determine your investment timeline.
Right. And how much risk you're willing to take.
Makes sense. If I'm looking to retire early, I might need to be a little bit more aggressive with my investments, right?
That's a good point. Your timeline plays a significant role in your investment strategy.
What else is on the blueprint?
Next up, we have your savings rate and asset allocation. These two work hand in hand.
Okay, let's break that down. What's the savings rate and why is it so important?
Your savings rate is simply the percentage of your income that you regularly put aside for investing.
Okay.
Even if you can only save a small amount each month, the power of compounding will work its magic over time.
Compound. That's where the money we invest earns more money, which earns even more money, right?
Is that it? It's like a snowball rolling down a hill, getting bigger and bigger as it goes.
Okay, so we've got our savings rate figured out. Now, what about asset allocation?
Asset allocation is how you spread your money across different types of investments, like stocks, bonds, real estate. Each asset class has its own risk and return characteristics, and your allocation should align with your risk tolerance.
So risk tolerance, what exactly does that mean?
It's basically how comfortable you are with the ups and downs of the market. Imagine a roller coaster. Some people love the thrill of the big drops, while others prefer a more gentle ride.
So if I'm someone who can't stomach the big drops, I would lean towards a more conservative approach with my investments.
Exactly. It's all about finding the right balance between risk and potential return that allows you to sleep well at night.
This is all starting to make a lot of sense. So we've got our FI number, retirement date, savings rate, and asset allocation. We're ready to actually start investing. What's the next step in our investing adventure?
The next step is finding the right brokerage account to actually buy and sell your investments.
Okay. I've heard that finding a brokerage account as an expat can be a bit of a challenge.
Yeah,
What should we be looking for?
you're absolutely right. Not all brokerages are expat friendly. Some things to consider are fees, account minimums, and what type of investments they offer. You also want to make sure their platform is easy to use and accessible from your current location.
So we need to do our research and compare different options to find the right fit for our needs.
Exactly. And don't be afraid to reach out to different brokerages and ask questions. It's important to feel comfortable and confident with the platform you choose.
Okay, so let's say we found the perfect broker and our account is all set up. How do we actually transfer our money in there?
It's usually a fairly straightforward process. You can typically transfer funds directly from your bank account,
Okay.
but it's important to pay attention to any fees or currency exchange rates involved.
Ah, yes, those pesky fees. Banks and exchange houses always seem to have hidden charges lurking around every corner.
Exactly. It's always a good idea to shop around and compare rates from different providers. Sometimes using a specialized currency exchange service
Right.
can be more cost-effective, even if it takes a little longer for the transfer to go through.
Great tip.
Yeah,
So the money is safely in our brokerage account. We're ready to start investing.
almost.
What's next?
Before you jump into buying investments, there's one more crucial step: automate your transfers.
Automating transfers. What do you mean by that?
It's all about making investing a habit
Okay.
and paying yourself first. Set up a recurring transfer from your checking account to your brokerage account,
Okay.
even if it's a small amount.
Right.
This way you're consistently investing without even having to think about it.
Love that idea. It's like putting my investing on autopilot. Money's in the account, transfers are automated. Now we're ready to dive into the exciting world of investments. What's next?
Not so fast. Before we start buying anything, we need to talk about how to actually choose those investments.
Okay, that sounds like a good place to stop for today. We've covered a lot of ground, from tackling debt to automating transfers.
We've laid the groundwork, built our safety net, and mapped out our investment strategy.
Exactly. We've built the foundation. Next time on the deep dive, we'll start filling in that house, exploring different types of investments and how to choose the ones that align with your goals and risk tolerance.
You'll miss it.
So make sure you're subscribed to the deep dive so you don't miss our next episode, where we'll delve deeper into the world of expat investing.